then where does everybody go? And they're not going to go to the Chinese yuan. They're not going to go to the euro. They're certainly not going to the ruble. They're going to go back into gold, and that's the place to be. So the fundamentals for gold and silver are astronomical because we're going to have this day of reckoning.
Hey friends, thank you so much for tuning in. It is wonderful to have you back. And today we're going to talk about peak gold in the case for gold. Do you guys realize that global debt hit an all-time high of $233 trillion in the third quarter of 2017. We're fast approaching the year 2019, folks, and the current global debt is more than 3 times the size of the global economy. So it's high time we talk peak gold in the case for gold. And to that end, this interview is brought in part to you by our friends at Harvest Gold. And I have on the line right now Patrick Donnelly. He's an independent director at the company and a geologist. Patrick, thanks for joining us.
Thanks for having me on, Sean.
Hey, it's a real pleasure. And, I want to talk to you about the gold to silver ratio. I want to talk to you about peak gold. But first, I just want your response and your thoughts on that staggering number, the global debt number. As the Rothschilds famously said, they like to leave the last 5 or 10% to the suckers. We have seen an unbelievable run up in the stock market with, for instance, Amazon stock sitting at around $2,000 a share. It seems like the most crowded trade in the world are the stocks, and the least crowded trade in the world right now is gold and silver. Your thoughts on global debt and any of that?
Yeah, when you mention that number, 3 times greater than the global economy, it's pretty frightening. And we've seen, indicators that it could get out of control. We've seen, countries like Greece, teetering, and that's just a tiny little country. And you look at not only just the global debt, but you're looking at, if you look at the United States and you look at some of the, you look at Illinois, where, the unfunded pension liabilities are in the billions. It's staggering. In Canada, consumer debt is at an all-time high, and yet people here are up to their eyeballs in debt. It's frightening, and I hate to say it, there's going to be a day of reckoning. And, Greece, again, I know it's maybe old news, but I was reading the story where they're finally starting to, have some stability, but it's still going to take them 75 years of climbing out of their debt. And that's assuming that every year, their economy is strong. So, you look at a country like Canada or United States or China, the amount of debt in China is just staggering. And what people don't realize is, the legitimacy of the Chinese government is predicated on people having a high standard of living. And the Chinese are going to take every step they can, maintain that, even if they have to keep, digging themselves further into debt, which is, got to be in the trillions of dollars. So it's frightening. Switching over to, you mentioned, all these tech stocks and the valuations we're seeing. It's crazy because, they trade at mass multiples to what they're earning, if they're earning anything at all. Facebook and Twitter and Amazon, the multiples are trading out are ridiculous. You look at the Teslas, what their valuation is compared to how much revenue they're generating. So, and yet, precious metals aren't getting any love in this market. When I'm a geologist, but I also have a finance background. I have an MBA. The first thing I learned was that, the markets are supposed to be rational, but what I've learned is the markets are totally irrational. And at some point, there's going to be a reckoning.
Well, I certainly agree with that. And one of the things I wanted to ask you, well, first of all, I just want folks to know that Harvest Gold trades on the TSX as HVG.tsx.v, and over on the OTC as HVGDF. And I would suggest people check out the website. I want to ask you guys, as the chief geologist over there at Harvest Gold, I want to ask you about the amount of gold in the ground there. But I want to ask you this too. Keeping apples to apples in 2017, that $233 trillion number of global debt, at the same time there was only $7 trillion of gold ever mined in the history of the world. And what I want to do is I want to let people know that I think there is a big shift coming. if we take a look at what the smart money is doing, Patrick, we have to look at JP Morgan. And I want to play this soundbite. It's about 45 seconds. It's from my friend Bix Weir, who I've had on the show many, many times over the years, good friend of SGTreport. And he's noticed some very strange things happening with JP Morgan, not the least of which is their 800 million ounce silver hoard, but also they appear to be getting out of their Goliath short position, which could mean very important things for the silver and gold market in the future. Take a listen to this.
Sure. They have their 800 to a billion ounces of physical silver hiding in the corners, and they will no longer short silver. That is the big thing. And they don't even have to go long, truthfully. For the price of silver to go moonshot, all they have to do is not short into the rise. And it has to rise because what's going on is 100 million or 100,000 contracts, 500 million ounces of physical silver shorts, not physical, electronic silver shorts that have to be closed out. This is the largest short position by the technical traders. These are those traders. I've always said technical traders it's a recipe for disaster on the short side because it's unlimited losses.
I'll pause it there. You know, the point being that it looks like JP Morgan is in the process of closing out their short position in silver. So your thoughts on that? What would that mean for the market? I mean, if silver goes higher, gold certainly goes higher.
Well, absolutely. And it's interesting, you know, that they're closing out the shorts and they got to cover it all. And that's going to be a lot of silver. And people don't realize the silver market's not a large market. So it's not going to take much to move it. And, you know, you know, it's indicative for what we're going to see in the gold market as well. You know, it's funny, you know, gold's been always used, you know, as you know, a store of value or protection against inflation. And we've seen a lot of volatility lately, you know, with inflation in the emerging economies, and obviously concern about, you know, these trade wars that are happening globally, and everybody's been flocking into the U.S. dollar. And we've seen this before. I remember the late 1990s. I remember there was an article in Time magazine saying, you know, is this the end of gold? Because everybody was using the U.S. dollar as a store of value, and yet, you know, the U.S. government has, you know, trillions of dollars worth of debt. At what point does the global economy become concerned about the U.S. debt load, and therefore undermines the credibility of the U.S. dollar? Then where does everybody go? And they're not going to go to the Chinese yuan. They're not going to go to the euro. They're certainly not going to the ruble. They're going to go back into gold, and that's the place to be. So the fundamentals for gold and silver are astronomical. Because, you know, we're going to have this day of reckoning with the global debt load.
Do you want to make the case for Harvest Gold as the geologist? Tell us what you're looking at in terms of what's in the ground, and just give us an idea here of the prospects for the company, because what I want people to understand is that in 2018, May 16th, in fact, of 2018, Ian Tefler, the chairman of Gold Corp, said, we're at peak gold. We've hit peak gold. What does that mean to you, and what should it mean to those of us who care?
Well, you know, I'll put on my geologist hat on, and one thing Mr. Telfer is absolutely correct. We have not seen any major gold discoveries in a long time, and yet, you know, we've been seeing record amounts of exploration going on for a number of years, and it's getting harder and harder to find gold. And now companies are going into jurisdictions that are even more challenging. So we're seeing a crunch now on the supply side. How is this connected to Harvest Gold? You know, I just joined Harvest Gold on the board in June, and what I like about it is, you know, the project that they have is Cerro Cascaron. It's right in the heart of the Mexican Silver Belt, and it's surrounded by some world-class gold and silver projects. And the operator, we acquired this project, or we have an 80% earn-in agreement with Evrim. And the chief geologist in Evrim is a gentleman named Alain Charret, who's like one of the most celebrated exploration geologists in the world. And he discovered Cerro Cascaron. And Mr. Charest, he's discovered a number of multi-million ounce gold deposits. And so the deal we have with Evrim is, we're earning to the 80%, but Evrim and Alan Charest's team are doing all the work. So, when I, not only am I a geologist, but I'm also a former mining analyst. And I used to pick stocks for 4 years. And the first thing I look at is people. And the reason I joined Harvest Gold, because of Alan Charest and his team is doing all the work on this project. And how much gold there is there, I don't know. It's very early stage. There's certainly plenty of smoke there. There's numerous showings, geochem anomalies, that sort of thing. The geology's there. It is a risky story. That being said, these juniors, we're trading at 8 cents right now, and it wouldn't take much to move that stock. So we just raised some money, and we're going to drill, about 3,000 meters there. And like I said, we got some phenomenal targets, and again, led by the Evrim team. And Evrim, we got this project on Evrim a couple of years ago, and Evrim was a penny stock, and then they made a discovery, and they're a $100 million company right now. So these guys know what they're doing. They've made discoveries before, and we're fortunate that we have them as a partner where, we can earn up to 80%. We just cut them a check, and they do the work. Our overhead costs are basically zero. Nobody here is being paid. We're in this to make a discovery. And again, we're in northern Mexico, the Chihuahua State. I've been there before. Really great place to do business. Mexico is a mining country, especially northern Mexico. So just a great opportunity, and that's why I joined this company on the board.
Well, I've talked to so many CEOs and chairmen of these junior miners, and I just never thought the beating would go on this long. I have to be honest, I'm extremely astounded that the ugly stepsister in the whole world of stocks are these junior miners, and all gold and silver miners, frankly. I mean, yeah. I don't know that anybody has dodged this bullet. And meanwhile, the Cinderella at the ball for whom the glass slipper seems to fit for everybody right now is Amazon, Netflix, and Apple. I mean, at what point does this change? Again, the Rothschilds said we're going to leave the last 5-10% to the sucker. And Lynette Zhang has told me the insiders, a lot of these major Wall Street companies that have done so well are getting out in droves. They're selling their shares. So where do you think the smart money is going to go? And is it going to be your friends, neighbors, and colleagues down the street that are going to be the last people to have any idea they should have got into gold and silver and mining stocks?
Yeah, that's a great question. And at some point it does turn. And, we own 10% of the stock in this company. And, it's a risky stock. But at the same time, there's tremendous upside. We got a market capitalization of only $3 million. And, if we have the same success as Evrim, we could be a $100 million company. So, the upside is there. And as you noted, Sean, the fundamentals for gold are very strong, and we're running out of it. And we're fortunate to get our hands on a very good property in a very good jurisdiction. And at some point, the markets do get, you start to see the markets get a little bit frustrated with Tesla, where they don't deliver. And you, like I said, you see these multiples that these tech companies are trading at, and 50 times earnings, what have you, and the market realizes, holy cow, where is the intrinsic value? Whereas the physical metals, there is intrinsic value there. You're actually producing something out of the ground. And the greater context is, we're seeing a global economy where everybody's flocking to the U.S. dollar. Well, what happens if that refuge is gone? Where else are people going to go? They're going to go into precious metals, and that's what we've seen in the past.
Can I ask you something? For those of us, my listeners are very much into silver, physical silver, and of course, a lot of folks buy physical gold as well. As a geologist, what do you guys find? I know you don't run silver mines there, but typically, here's the thing. The silver to gold ratio, I think right now as we're having this conversation, is somewhere around 82 to 1. It's a little absurd given historical standards. I mean, if we go back 100 years, I think we're talking 15 to 1. But I've seen samples, I've seen evidence that the actual silver to gold ratio as it's mined out of the ground today is much closer to 9 to 1. Your thoughts on that, this 82 to 1 ratio?
Well, yeah, that's interesting. And I think it's indicating that it's not so much, what's being mined out of the ground, it's just sentiment that silver is very, very unloved. and it's considered a poor man's gold, and it's just there's very little appetite for it. And that's when you want to get in. That's when you get in the ground floor of these things. And yet, we've seen a lot of silver supply come off the market. We've seen some of the largest silver mines in the world have been shutting down, and we're seeing, as Ian Telfer has stated, we've hit peak gold and we've definitely hit peak silver. So at some point, it's all based on sentiment. What you see with the tech stocks and the metals and everything is not based on fundamentals. It's based on market sentiment and emotion, and that's why we're seeing this ridiculous 82-to-1 ratio. At some point, the market's going to recognize that it's going to turn, and it's going to turn hard, and that's usually what happens. So what I recommend to people is get in the ground floor, and like I said, Harvest Gold, we're an 8-cent stock. We got money, we're drilling, and if we can hit something, then we're in business. And the mining companies love Mexico. Mexico is a great place to do business. Some of the biggest mining companies in the world operate in Mexico, including Mr. Telfer's old company, Goldcorp. So this is a good opportunity for investors. And like I said, it's a risky story. It's absolutely risky, but the risk to return, risk to reward, is phenomenal. And if we can make something happen, it's going to really reward investors.
Yeah, and full disclosure, I don't own any of your stock at this point, and I'm not a certified financial planner. So this is not I'm not recommending anybody buy or sell anything. I'm just telling the story that I think physical gold and silver, and those that mine it, may be the story of the next 10 years, because we know what the story of the last 10 years has been. It's been this historic run up in debt in these stock markets. And I guess we could sort of end on this. Your thoughts on hyperinflation. Our friends over at Silver Doctors recently put this article out. Hyperinflation warning, U.S. and Mexico actively preparing for the hyperinflation in Mexico. And then they go on to make the case for that. And this was on August 31st, 2018. It's certainly possible. We've seen what's going on in Venezuela and other parts of the planet. We know what happened in Zimbabwe. I think the ultimate day of reckoning would be if we see any hyperinflation in the North American region.
Or in Europe, to that matter, or any large economy. That is we've seen it in Argentina, we've seen it in Turkey. What if it spreads to Brazil, which is a very large economy? What if it spreads to China? Then we got big problems, and because the world nowadays is very closely intertwined. So it's definitely a realistic proposition. We're starting to see, a little bit of inflationary pressure in the United States. So absolutely, and again, you start seeing, currencies being debased because of all this inflation, and eventually the market's just going to flock to the hard assets, specifically gold and silver.
Well, that's what my guess would be, and been wrong for a while here. Again, really surprised by this historic run-up in the stock market. But of course, with the plunge protection team every day preventing any sort of major plummets, it just seems like this thing is getting really, really long in the tooth. And I guess as it pertains to gold, though, I should share this from our friends over at TF Metals. They write that another red candle, the reaction to today's BLSBS, assures that we'll end this week with another red candle for COMEX digital gold. That's 16 of the past 21 weeks, and it marks the ugliest sustained downtrend in years. I think the point there that needs to be made and reaffirmed here is COMEX digital gold. It's the same exact problem we started the conversation with in regards to silver. These big banks love to go short paper gold and paper silver. And it begs the question, where do the prices of these metals go when that digital manipulation stops?
That's a really good point, because what we've seen is the amount of gold traded compared to what all the physical gold exists. Amount of gold traded per year, I think it's something like 10-to-1 or something like that. So the amount of physical gold, there's 10 times as much paper gold being traded as there is physical gold, which is ridiculous. So because of that, the underlying prices are not reflecting the fundamentals because of all this manipulation. So yeah, if somehow that was, if that ever broke down, we'll see gold really move.
Yeah, we most definitely will. I think, if you don't mind, I'll ask you one last question here about the economy here in the United States. It's been my position for a very long time that if Hillary Clinton would have gotten into the White House, it would have been the final nail in our coffin as a republic. It would have been the end of our sovereignty, open borders, immigration, seizing the guns, all of that. I also think she would have probably pounded the final nail in our economic coffin as well. What are your thoughts on Trump playing hardball with China, with the tariffs? On Friday, he threatened China with another $267 billion in tariffs, and here the Chinese were hoping he'd lay off the initial $200 billion that the administration had proposed in tariffs. Your thoughts on President Trump and the economy in general? Is our economy robust enough that we can hold off hyperinflation despite our $20-some trillion in debt?
I admire Mr. Trump for standing up to the Chinese, because for years now they've been manipulating their currency. They've also, they've also been applying just, unadvantageous trading policies. U.S. firms that want to operate in China got to fork over all their technology. And they haven't been playing, fair on the trade front with the United States and the rest of the world. It's not just the United States; it's all of us. So it's about time that someone stood up to them and held them accountable for their trading practices. Like I said, specifically the manipulation of the yuan. They have an unfair advantage because the standards, the quality standards are poor there. Working conditions are poor there, and so U.S. workers are at a huge disadvantage because of all these things. So, I applaud Mr. Trump for doing that, and not just China, but other countries. I'm a Canadian, and he's holding Canada to account for a number of things. I hate to admit it. For example, dairy. We subsidize the dairy industry, and previous administrations in the U.S. have ignored it, but having them the dairy market here manipulated is not good. It's not just bad for U.S. It's also bad for Canada because we pay ridiculous amounts for cheese and milk and stuff. And President Trump is calling a spade a spade. So no, it's good. And what I really like, all these U.S. companies that have left the U.S. and hiding taxes from the U.S. He shamed them to coming back home. They want to sell their products in the U.S., but they take all their money out of the country and avoid paying taxes. And he shamed them, and I think that's fantastic. And he's also, also carried out much needed tax reform as well for corporate taxes. The U.S. is the highest corporate taxes in the world. What this means for hyperinflation? If it's not managed properly, if the monetary policy is not managed properly, if the debt's not managed properly, then this is all for naught. And obviously, my only concern about the Trump administration is that their spending is getting out of control as well. So they need to manage that. But in terms of global trade and standing up to the Chinese and other countries, it's about time someone did that. And trade doesn't work unless people follow the rules. And if you're not following the rules, then the whole system doesn't work, and then that leads to global economic uncertainty.
Yeah. All righty. Well, and again, we have over $233 trillion in global debt, and only 20-some trillion of that is U.S. debt, at least according to the official debt clock. So maybe we stand a chance. And, it was Lindsey Williams. I'm not sure if you're familiar with him, but I interviewed him a few times back in the day. And he always said that he had this globalist insider friend. He used to work on the oil fields at Prudhoe Bay. And he said his globalist insider friend said they were going to run the stock market up to unimaginable heights. He told me this in 2011 or so. And boy, I should have taken a flyer on that bet. He was right. He said they're going to take the stock market up to unimaginable heights. When you think it can't go any higher, it will go higher still. Yeah. And when they eventually pull the plug, you'll know it because the EU, the euro, will fall first. And if you see the euro falter, he said, you'll have about 2 weeks because the dollar will be next. So definitely something to keep an eye on. There's so much tumult in the EU.
Oh, the EU is it's a basket case, and especially if Great Britain can't get its act together and somehow have a structured withdrawal from the European Union, which I don't know what's going to happen. They can't seem to get their act together, and they got to have their act together by March. And I don't know what's going to happen to that. So, that could be the trigger that puts everybody, if it's a volatile or acrimonious exit, that has global implications for everybody, including the United States.
Yeah, it sure does. All righty. Well, we have a very informed audience, and many are gun shy about the mining stocks and silver, too. I'll be honest with you. Physical silver has been no gift. I mean, many of us were buying in the 30s and 40s on that last run-up. I think it will definitely get there again. The question is when. I think the miners will definitely rebound again. The question is when. Your final words on Harvest Gold and the case for Harvest Gold.
Well, it's a great opportunity to get in because in a week or two, we're going to be drilling. And as I said before, Alain Charret and his team are the ones running it, and so we expect to have lots of news coming along. And it's cheap, and we've got good people, and if we can get a couple of holes to hit, then this thing's going to start to move. So I'm excited. That's why I joined the company. I joined Harvest because I thought it was a good story, and the juniors are risky, but when they do work out, they're the bang for the buck is off the charts.
That's right. And guys, if you want to learn more about this company, you can visit the website harvestgoldcorp.com. And again, the tickers are HVG on the TSX and HVGDF on the OTC. Our guest has been Patrick Donnelly, Independent Director at Harvest Gold and Geologist. Patrick, it's been nice speaking with you. Thanks so much.
Thank you.
All right. And guys, thank you so much for tuning in. We very much appreciate it. And for real news 24/7, visit us at SGTreport.com. God bless.